Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY, the Qs, and IWM. I've also got a handful of trade ideas for you as always towards the end of the video, so stay tuned for that. So jumping right into our S&P analysis, let's cover our sectors first. Leading the pack today was energy, followed up with the XLF for financials, which as we know is the second heaviest weighted sector in the S&P. And leading to the downside though was our XLK, the tech sector, heaviest weighted in the overall S&P. So what's noteworthy and what we can take away from this is if we just check out that XLK chart, if we see any sort of rebound in this XLK chart, then I do believe it should help the market move slightly higher. And I do think the market will move slightly higher into the end of the week, as we'll talk about in just a moment. So XLK, any sort of upside activity here will certainly help the case. But notice XLK had a red day and SPY finished pretty much flat. So who was doing the most work? Obviously financials continue to be on fire. But one more thing, well, two more I really want to mention here are that industrials are just starting to break out of this significant, pressure cooker top and range that we've had on the daily time frame. I do expect and think they can move higher, which again bodes well for the S&P as a whole, as well as if we come in and check on the XLV, which is healthcare. Again, this one is the third heaviest weighted sector, and I think this one may pose a slight issue. We can obviously see these inverted hammers forming here. If we get a true rollover at this 50 SMA, then that may be a thorn in the side of the S&P. But based on everything we're looking at so far, I do think, again, if tech can have some sort of a green day, financials continue to be strong, and the XLI continues its breakout, we're in good shape for the S&P moving slightly higher. One thing we want to just talk about and focus on here on the SPY daily time frame is the fact that we've finally broken and closed above our resistance trend line, which is super noteworthy, right? We've talked about in the weekend update, the weekly watch list there, if we can close above this, then we're looking for the target here, basically the all-time high retest closer to 392.40. And again, I do think the market slowly dribbles there into the end of the week. One thing I want to point out, inflation news was certainly in the headlines. People were concerned about it. But if we pop this window open and we just scroll back to this morning's numbers, again, I don't technically like to trade the news, and this wasn't a news-driven trade, but it's important to note that here, the year over year, people were talking about, closer to 2%. It really wasn't that bad, right? It was about 1.7. Prior was 1.4. So I think the market really liked that information, and that was one piece of news that drove us slightly higher, especially in the pre-market. But now we're carrying that forward. Again, let's check in on the bonds or the notes. We have done that in the past. They continue to soften a little bit here, right? They're coming up slightly, which is a good thing, as we've talked about in the past, for our financial sector. We didn't want to see them really crack to the downside, and we also didn't really want to see them rocket ship to the upside. So this small little drift higher here in the ZN is actually a good thing. If you're not familiar with this chart, maybe the TNX makes it a little bit easier to look at. This is the 10-year rate, and if the way you read this chart is essentially putting a decimal place after our 10-digit there. So technically, this level I have is a 1.5 10-year rate, and that's a noteworthy level here in the 10-year because that 1.5 correlates to the S&P 500 dividend, and generally people would much rather put their money in a risk-free quote-unquote product here like the 10-year than put it in the SPY and pick up that 1.5 dividend. So as you see the 10-year cross above 15 or 1.5, that's when you see SPY start, money start to flow out of SPY and into the rate. So that's something to keep in mind. But again, I think we're coming back down. We're backing off very softly, and I think if we crack back down below that 15, that bodes well for money moving back into the S&Ps, which, as we talked about, have closed now above their daily resistance trend line. And I do think it makes, for a nice move here to retest this cluster of highs closer to that 392.40. Anything above that, as we talked about in the weekly watch list, we're probably looking at blue sky territories. This high here does not hold a lot of importance. As we know, it did not really have too much volume conducted at it. It was the day after a holiday session. So we're looking at blue skies after that. Let's go ahead and take a tour through our market internals here. I think everything has looked phenomenal this week. Really on Monday, when we saw that large up and down, internals remained flat. If you look here at our volume read, they never really went negative. And I'll tell you here that the breaths were always split that day. right? So although the Nasdaq was certainly down, the S&Ps were up almost all day. In terms of our advanced decline line, same thing. Look at this. They never even have come close to minus 500 at any point in time this week, which again is why I do believe the S&Ps will continue on this nice little trend higher. Same thing with the cumulative tick. Again, don't really focus on this craziness. That's more for intraday, but the cumulative tick shows us that for a very small fraction of a percentage of the time here this week, we were negative, right? The rest of the time we were green. Great trending day there on Tuesday. As soon as we cracked above 2,000 by noon, we knew it was on. And then today, on Wednesday's session, slow and steady build higher as the market continued to sort of just slowly drift back towards the highs that were set early on in the session, again, coming off of those CPI numbers. So let me actually expand this because I do want to talk about a trend line that is in play in the futures market. If we look at the week of trade so far, I mean, look at this. This is essentially your buyable pullback as of right now. If the tool would work, there we go. We've got an anchor point, and here is your trend line. Anytime we come into trend, I would say that's probably a strong buy as long as our internals hold up. And again, this sort of supports the theory that the market will go higher into that area of resistance we've talked about on the SPY daily time frame. In terms of gaps and structure, everything checks out. Let's go ahead and take a look at our market profile here. Everything has looked phenomenal this week. I mean, look at this. We had value completely break away to the upside on Monday, right? Value from Friday was way down here. Remember that the shaded yellow area of the volume profile is where value is at 70% of the day's volume. Here it was on Friday, and you'll notice that on Monday, completely break away to the upside here. Breakaway to slightly overlapping into Tuesday, and then definitely overlapping here on Wednesday, which is completely fine, right? We saw a pretty substantial move off of those lows. It's completely normal for the market to start to balance here. We talk about the concept of excess leads to balance, balance leads to excess, and right now we're coming off of prior excess. I would not be surprised to see the market sort of balance if we just scrunch this up a bit through this prior balance area, right? We've talked about this in the past, and we're just right back in it. So again, we're looking for the rotation all the way up to the top end of our balance area, which is closer to that 392 in SPY that we just talked about. In terms of profile structure, we had some poor highs here, which if you were in the Discord, we definitely talked about these intraday. Here was poor high number 1, broke it and repaired on Tuesday. Here was poor high number 2, broke it and repaired today on Wednesday, and now the high is certainly, it had some meaningful excess on top. We almost have a perfect bell-shaped distribution, which is exactly what you want to see, meaning that, the thick of where value is, it's essentially deemed fair. It's not like we have longs who got piled on here at the highs or shorts who piled on at the lows. Value is, exactly like we said, just fair. So nothing really glaring as an issue here inside of the market profile. Moving back over to wrap up our broad market sort of analysis, let's just go ahead and talk about the Qs. This is obviously the laggard, right? It's the one who's sort of holding us down right now. Tech is obviously weak, but if those rates continue to fall back slightly, I do think that bodes well for tech. What's great about today's action is they actually filled the gap here and repaired some of the poor structure below us. So to me, backing off of this trend line on the first touch after coming all the way from these lows is completely normal. Now, if we see some consolidation sideways through time, I would certainly look for a break there and a move over back over this 317.25. That's again if the S&Ps continue to rally a little bit higher, then we're really looking at the 50 SMA and top end of balance as we discussed in the weekly watch list at 324.16. If we roll over harder, again, your levels are at 305, and then finally the low from Friday, which is really closer to 298. I don't really suspect that we go there. I do think that this is a safe low, that's safe in quotes, into the end of the week, but time will tell, right? Moving on to IWM to wrap up our broad market here. This one, again, looks phenomenal. Just like SPY, we're breaking with a little bit more authority through that daily resistance trend line. We've got a clean break above, a clean close above, and now we've sort of poked above. No, I'm saying above so many times, this area of the balance highs there at 227 the whole dollar. If we can get some closes, something like looks like this, I think it sets up a great scenario for a pressure cooker top to form at the all-time high 230.30 and then move into blue sky territories. If this upper wick does result in some more selling, I would really watch for IWM to potentially come back down, maybe back test the resistance trend line one more time, but not really looking for a significant rollover considering what we've done, come off of these lows, we've retraced the move 100%, right? If we talk about from here to here and now back to here, that's 100% retracement. And generally, you're not going to go back down into that range too deep. So I'm watching for IWM to potentially cool off, go sideways into the end of the week. Moving into these trade ideas now, let's keep it quick. We'll go to ABBV for ABBV. This one is simply a symmetrical triangle, right? If we look at this chart, something like this, there's your resistance trend line. Here is your support trend line. The triangle's running out of room, right? And the beauty about this one is that the 50 SMA is tangled up right inside. So if we can get a significant move off of it, I do think we come back up and revisit these highs closer to 114. Based on my bullish poise in the market, that's my preferred direction, but we are willing to trade it lower. If we break the support trend line, simply looking for these lows closer to 102. Next up, we have COP for ConocoPhillips. This one is fantastic because we have a tight daily range, and basically what we need here is a close above, or any sort of trading activity above 59.70, we'll call it 60 if you want to use the true high of this weekly balance so far. It's 4 days of balance. If we can take out the high, simply looking for a doubling of this range, and as we know, that's how we play the balance areas. It's going to put us closer to 61.75, we'll call it, to the upside. If we fail to the downside, I wouldn't really be too interested in taking it short, just because if we do something like this, you'll notice prior market structure, I guess it's about the same actually. So the short would be okay here. It wouldn't be my favorite setup, would prefer it long, but if we do flush these lows at 57.35, look for 55.10, 55 the whole dollar. Next setup is on the yellow metal, GLD for gold, and this is a longer term setup, and just something I want to make your attention to as we continue to sort of trade into the, into this area that I have found as a significant area in the chart, right? If we look back here, congestion, consolidation led to a pretty impressive breakout to the upside. We held it to the penny here on, Monday, on that low there, and now we're just sort of chopping around in this range. So it's something that I would keep a close eye on, looking for a break back above that 164. Wouldn't really be in favor of a move underneath the 157, but just know we're in a choppy support zone here in gold. Next up, we have GM, which is sort of, coming back from the dead, if you will, getting into the EV space, and this one's simply a pressure cooker top. Any breaks above our 57 whole dollar, we're looking for trend continuation here. Into the end of the week, I would just sort of trail a stop higher. If you're looking for day trades, just trade it higher, right? Looking for calls above that 57 level. If you're a swing trader and want to hold on to this for a longer time, here's your consolidation range. If we break out to the upside, again, simply based on doubling rules, you're probably looking about 62.50 to the upside here in GM. Next up, we have MDT for Medtronic, and we'll leave it off on this one. This, again, is another sort of pressure cooker top, just a general area of highs that have had, struggled to break. And if we do get some acceptance above, I do think there's room to run. If we look to the left, there's not a whole lot other than this prior all-time high, which I think makes a phenomenal target up at 121.50. Again, that's the sort of quick break, but I would definitely hold out if you're a swing trader on this for much more than that, simply based on the amount of time we've spent consolidating up here at the highs. I will make your attention also to this sort of support trend line. Not sure if this will help it line up. Look at that. Perfect. So support trend line there. If you want to wait for it to consolidate longer, maybe you don't believe in it right now, it pulls back. If it holds, that's your sort of signal that, boom, the break is, maybe coming, right? So it's something to keep an eye on into the end of the week, and certainly as we head forward into the trading month here of March. So all that being said, that's going to wrap up today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, feel free to let me know down below in the comments section. And with that, I wish you a green trading week, and I hope to see you all in the weekly watch list on Sunday.